Happy weekend to you all. Happy weekend to you all. You are welcome, guys. So I'm gonna make this weekly Forex forecast a live one, so you guys can communicate with me live. Send me your message from the message box. If you have a message for me, you can send your message. If you have any question, the comment box is right there. So thanks for joining me. And then this is the live weekly Forex forecast for the 12th of August to 16th of August 2020. So I'm going to be sharing with you the list of currency pairs I have on my watch list next coming week. And then if you haven't subscribed to this YouTube channel, do not forget to hit on the subscribe button as well. Click on the notification bell. So whenever I release additional content of this kind, you're going to be the first to be notified. And then the content I'm going to be offering today, the analysis I'm going to be offering today is not based on the investment advice. It's based on what I can figure out technically in the market. So it's based on my personal decision. So make sure you know what you are doing. So I got 5 currency pairs I'm going to be sharing with you guys in this week. I got the British pound sterling against the USD. I got the euro paired against the USD. I got the USD paired against the Japanese yen. And then I got the Australian dollar paired against the Japanese yen. And then we're going to wrap up our analysis with the XAU paired against the USD. So the first currency pairs I'm going to be giving analysis on is the British pound sterling paired against the USD. And then as we can see right here on my screen, based on the daily chart frame, I'm going to expand this chart right here so you can see the whole chart properly from your end right here. So this is the chart of the British pound sterling paired against the USD. This is the chart right here. And then based from the swing low structure right here, we can see how we got a massive right from the swing high right there to this swing low right there. We got a downward bearish trend. And this key level structure, whereby the boost actually found a support right here. It was actually a resistance structure dated back to past historical record. That was in June of 2020. And then on Friday, market bar closed above this key level structure, which the next key level structure, which was at that is a 1.30029, which was actually a support structure right here. Likewise, we got it as a resistance structure and then a resistance structure right there. The bulls ensured a daily close above this key level structure. That is the key level structure of the 1.30029. So for the fact the bulls successfully ensured a bullish bar above this key level structure, whereby the bulls ensured a close above this level, and then the bears failed to defend the bulls from ensuring a close above this level, then it's a signal here the bulls are really interested to put up price upward. So next week, what we need to do is to pay close attention to see how price react to this key level structure based on the lower time frame, if we can figure out maybe a retest on this key level structure. But the key point right here we have to put into consideration is, for as long the bulls are ensuring a daily close of bar above this key level structure right there, then it's a signal the bulls are dominating the trend right there. And then don't be surprised if the bulls pull up price to the next key level structure, and that was a key level structure. That is a key level structure of the 1.32656, which was actually a resistance structure for the short consolidation phase right here. So the pattern I'm figuring right here is a continuation of the bullish rally, which had been existent from the swing low right here. Can say the bullish wave right there to the high swings right there before we had a bearish wave downward right here. We got a bullish wave upward right here. We got a pullback of a bearish wave, and then a bullish upward wave to the swing high right there. So the pattern right there is a formation of continuation of a bullish pattern for more bullish rally on the currency pairs against the USD. So Don't be surprised if the British pound sterling pull price above higher than the last swing high right here in order to anticipate for a more bullish upward rally. And then this could set this currency pairs to the next wave length or key level structure, which act at the structure of the 1.3700 or the 1.3600. Alternatively, next week, if the bear should step in, whereby they pull price downward and then ensure a daily close below this key level structure of the 1.30029, then it's a signal the bullish breakout right there is a weak pattern. And then don't be surprised if these currency pairs continue in a state of consolidation within this range right there. And then if that should occur, we still need to pay close attention to the dynamic structure and the dynamic structure right here, which was an extension of the dynamic support swing low right here. Likewise, the swing low right here, a high low we got right here, we got a high low right here, and a high low right here, a lower low right here. So we need to pay close attention to this pattern right here. That is, if the bears ensure back a bearish close next week. If that should occur, then it means the bullish momentum right there is still weak to ensure a more bullish aggressive rally on the British pound sterling against the USD. But for the kind of formation I'm figuring right here, and then my last weekly forex forecast, I pointed out the pattern we got on this currency pairs based on the 4-hour chart frame. If you view on the 4-hour chart frame, you're gonna see the pattern we got right there. It's like a formation of an inverse head and shoulder, and it is what is actually happening right now. We can see the key level structure right there is actually acting as the neckline of this inverse head and shoulder, and then we can see Friday bar did ensure a close above this neckline. So this is a formation supporting a more bullish interest on the currency pairs of the British pound sterling against the USD. So next week, pay close attention because the British pound sterling against the USD has no high probability to transform into a more bullish rally next coming week. So the next currency pairs I want to share with you guys, let's check the Euro paired against the USD. I got the Euro paired against the USD right here, and then I'm gonna expand my chart. You can see due to past historical record on this pattern right here, right from this structure right there, we can see a formation of what triangular bottom right here, which actually acted as a reversal for this consolidation phase right there for what a bullish rally. And then after price got to this medium right here, price carved another bearish channel, and they which contributed into what a bullish flag for more bullish aggressive rally. And then before price transformed into what a rising flag right there, a rising channel. And then price broke out. We can figure out a breaking out of price from this level, and the price failed to continue the more downward trend. So next week, last week, we were in expectation for price to be pulled back at this dynamic structure of the Euro pair against the USD. But we can see how Friday bar did ensure it did close above this dynamic support trend line. So I'm gonna zoom in so we guys can figure out this price action properly on our chart. So for the fact the boosts are ensuring a close of bar above this dynamic structure of the Euro paired against the USD, we can see how this dynamic structure acted as a support right here. Likewise, as a support right here, you can see it as a support right here, and then right here as a support. We can see the bullish wave right here. We got a bullish wave right here, a bearish wave, a bearish wave, a bullish wave, and a bearish wave. Price failed to go above this high like we did at right here. So at this medium right here, we figure out weakness in bullish momentum, and then we can see how the bears step into pull price downwards. So the boosts are now pulling price up again. So what we need to do next week is we need to pay close attention to this level right there. For as long the boosts are ensuring a close of bar above this dynamic structure of this rising channel right there, then it's a signal the boosts are willing to pull up price more aggressive upward. But before the boost can actually pull price to the next key level structure, which was a resistance for this trend right here for this currency pairs. That was in August and September. That's a price level of their 1.19621. The boost have to clear off these swings high we got right here. You can see the swing high right here is actually what a low high swings right here. We got a high swings right here and a low high swings right there. So the boost need to clear off these swings level right there before they can actually expose the next key level structure, which acts at the price level of the 1.19621. So this level right there, it's a very important structure we need to pay close attention to. And then this level right there has high probability to interest the seller in order to put price more downward. If the boost eventually get to this structure right here, failure for the boost to break out of this swing level right here, that is a midpoint of the 1.1900/1.18500. If the boost fail to ensure a close of bar above this key level structure of the low high swings right here, then don't be surprised if the bear steps in to pull price downward. And then if that should occur, then this is a formation of what price trying to carve more low high for a more bearish downward trend. So next week, if the bears successfully pull price downward a bit again below this key level structure right there, then it's a signal. All this pattern right there is just a mild consolidation phase, and then the bears stepping in to re-expose again to retest the next support key level structure, which acted as a support right here. You can see the support structure right here. This the key level structure of the 1.17122. And then failure for the boost to defend this key level structure right there, whereby the bears should ensure a daily close below this key level structure. Don't be surprised the bears are willing to expose it swing low right here. And then failure for the boost to defend this swing low right here. Don't be surprised the bears are willing to put price downward to the next key level structure of the 1.14428. So to summarize this currency pairs of the euro pair against the USD, pay close attention to the bullish breakout above this dynamic structure right there. Failure for the bears to put price downward next week, then don't be surprised the bulls have high probability to end to a more bullish aggressive rally. And then failure for the bulls to continue this bullish rally right there, if the bears can ensure a bearish close backward right there, then it's a very, very strong indication the bears are willing to put price more downward. So the next currency pairs I'm going to share with you, which I have on my watch list next coming week, that is the currency pairs of the USD paired against the Japanese yen. I have the USD paired against the Japanese yen on my watch list based on the higher time. If you have been following my technical analysis, I discussed about this currency pairs. I said based on the monthly chart frame, I am monitoring this currency pairs. There is high tendency there is a bullish or bearish breakout, which has high probability to extend into a multi-year rally. When I say a multi-year rally, it means a trend which can exist for like a year, 2, 3, 4, 5 years. Based for the fact this formation of this symmetrical triangle right there is forming based on the monthly chart frame. You can see that, and then we all know in a symmetrical triangle, price can break to the upside or to the downside, but we need to have a exercise patience to figure out the end point where price is going to break up to. Maybe it's going to be a bullish breakout or maybe a bearish breakout before we take the next action, before we act on our action. So I'm still monitoring these currency pairs of the USD paired against the Japanese yen to see the direction of breakout. Maybe the bulls are going to enjoy a bullish breakout or maybe a bearish breakout. But for the formation, I'm figuring out based on the lower time frame, and then which is the daily time frame. Here comes the daily chart frame. We had another symmetrical triangle. You can see that based on the daily chart frame, we can see right from the swing high right here, we have a series of rejections, and then from the swing low right here, a series of rejections. We had price broke out, and then price is retesting the key level structure right here, which acted as support right here, likewise as a support right here, as a resistance right here. Even though we had a choppy market right there, but it's acting as a resistance structure for the price right here. That was the last week, Friday, Thursday, and Wednesday bar. So I'm gonna zoom in on this currency pairs right here based on the daily chart frame. We can see the formation of bar which carved from Friday, Thursday, and the Wednesday bar is a formation which has a similarity of the that is the morning, that is the evening star. Can see that evening star variation, which has a bearish implication. So for as long the bears are still defending the key level structure of the 106.070, then it's a signal, it's an indication the bears are willing to pull price downward. So, and then we can see whenever price try to get to this dynamic support right there, there's always reduction in bullish momentum. So next week, pay close attention to this currency pairs, but the kind of formation I'm figuring right here now, it has high probability to interest the sellers to pull price more downward. So next week, pay close attention to the USD paired against the Japanese yen. And then let's try and navigate based on the lower time frame, that is the 4-hour chart frame, and see the pattern we got right here. So this is the 4-hour chart frame. Based on the 4-hour chart frame, I have another extension of a dynamic trend line. But let's check on the daily chart frame. I want to show you guys this extension of dynamic trend line. Here is the dynamic. Okay, let's extend this chart right there. If I should try and then connect the highs right here to the series of highs right here, likewise the highs right here and the highs right here, downward right here, you can see I have what? A series of rejections from the swing high right here, likewise right here, and the right here, right here. Price broke out. Let's try and zoom in. Zoom in, we can see the extension of our trend line from this structure right here, swing low high right here, low high right here, and then low high right here, and then low high right here. We can see price broke out of this dynamic trend line. I'm gonna have a black line to represent this figure, so this structure, so you guys can figure out properly. You can see that price broke out of this dynamic trend line, and then price is actually trying to close back. So next week we need to pay close attention to this currency pairs. So let's check based on the 4-hour chart frame. This pattern is very clear based on the 4-hour chart frame. So based on the 4-hour chart frame next week, if the bears successfully ensured price close backward into this dynamic structure right, whereby this dynamic structure failed to act as a dynamic support, whereby the bears pull price downward right here, then it's a signal the bears are willing to pull price more downward on the currency pairs of the USD paired against the Japanese yen. So next week, pay close attention to the currency pairs of the USD paired against the Japanese yen on that is a daily chart frame, to figure out if the key level structure of the 106.070 is going to act as a resistance structure, and the dynamic structure right there, maybe it's going to act as a dynamic support, or maybe price is going to ensure a close of bar below. The next currency pairs I want to share with you guys is the Australian dollar paired against the Japanese yen. I have the Australian dollar paired against the Japanese yen on my watch list next week. I can figure out a potential of trade opportunity right here. And then right from there, let's try and expand our chart. Right from the swing low right here, you can see the massive bullish aggressive rally we had. Can see the downward movement right here and the downward movement. So the pattern which we had on the Australian dollar pair, or that is the Australian dollar paired against the USD, Australian dollar paired against the Japanese yen, I mean. So I can figure out the resumption of bullish trend on the Australian dollar paired against the Japanese yen. We can see right from the swings right here, we get a resumption of a bullish rally. And then here comes another swing low right here. This is another pattern of a resumption of a bullish rally. So next week, we need to pay close attention to the Australian dollar paired against the Japanese yen based on the daily chart frame. The next key level structure the boosts have to clear off, that is a resistance structure right here. That was in June. And then likewise right here, midpoint of July and August, and the right here, midpoint of August and September. It was a support right there before price broke through right there. Now we need to pay close attention to the key level structure of the 76.577 to see how price reacts to this level next coming week. Failure for the bears to defend this key level structure, whereby the bulls ensure a daily close above this key level structure right there, then it's a signal of a more bullish interest in order to move upward for the bulls to have a close of trend above this last high right there, like we did add right from this swing high right there, we had a close of trend above this previous high right there. So next week, if the bulls ensure a daily close above this key level structure right there, it does has high probability to lead into a bullish wave to extend more above this last swing high right there. Alternatively, next week, if the bear should step in whereby they pull price downward, then it means this key level structure is still active as a strong resistance structure. And then we still need to ensure, a close of bar back into this dynamic structure right here. You can see it acted as a resistance structure right here, as a resistance right here, price broke through. And then if the bears can successfully ensure a daily close of bar back into this structure right there, it's a signal the bears are not yet giving up, and then it does has a probability to lead into more bearish downward trend on the Australian dollar paired against the Japanese yen. So it's time I wrap up this analysis with the gold. I got the gold on my watch list next week. I can figure out a potential of trade opportunity on the gold next week. So let's check that. That is the XAU paired against the USD. Here comes the daily chart of the gold. And then if you watch my last weekly Forex forecast, I discussed more about the gold. And right from the swing high right there, we can see the choppy market right there, which just led into a triangular formation before price broke out. So there's it right here. We got our rejections with a key level structure, and then price broke out, and then price is ensuring a close of bar back into this descending triangle right there. So in a descending triangle, it does has high probability to lead into a bearish trend. But right now, the bulls are not giving up, despite price carved a bearish engulfing bar right here. That was last week. That was in Tuesday bar, because actually this was Tuesday, Wednesday, Thursday, and Friday bar. Tuesday bearish engulfing bar failed to hold price downward, and then the boost gradually enjoyed a close of bar above the key level support, which was active support right there. That was in August, September. And then we can see that is the price level of the 1,902.743. Now the bulls are ensuring a close of bar above this key level structure. So for as long the bulls are ensuring a close of bar above this key level structure right there, then it means the bullish interest on the gold is not yet dried up. That means there is still much demand on the gold. So what we need to pay close attention to next week is the dynamic structure right there, which appears as a resistance right here. It's a resistance right here, likewise as a resistance right there. So we need to look out for price action at this dynamic trend line. Maybe it's gonna act as a dynamic resistance. And if it does act as a dynamic resistance next week, it means this pattern right here. It means this pattern right here is still active, as a triangular formation, whereby we can have our new construction of triangle below right here, whereby we can have this structure right here, can have this zone right here. Okay, let's try and get this right here. We can have it right here as what? As still a descending triangle, which means this is a descending triangle. So next week, we need to pay close attention to see how price is going to react to this dynamic trend line. Maybe it's going to be a resistance, or maybe price is going to break higher. So that is what I have on my currency pair. That is on my watch list next week. These are the currency pairs I'm watching out for trade opportunity. Even though I still have other currency pairs I'm watching or I have on my watch list. And then as time goes on, as what I figure out, anything I figure out in the market next coming week, I'm going to be willing to discuss, to share this with my VIP members, community of mine. If you haven't yet joined my free Forex trading webinar class, which I now hold 2 times in a week, there's a link under this video. I'm going to be holding this free webinar class every Wednesday and Saturday. That is going to be 9 p.m. GMT +1. So you can sign up so you attend the free Forex webinar every Wednesday and then Saturday of every week. That is 9 p.m. GMT +1. And if you want to join my VIP members community, this is a community whereby I share my trading ideas. Any trade I want to take, I'm going to share with you in video format, in image format, in conversation format, chat, forum, whereby I share my personal trade. So when I have a winning trade, you as well have a winning trade. And then if I have a losing trade, I will explain why we have a losing trade. And then if you have a winning trade, I'm going to explain why we have a winning trade. So you learn and then you also earn. So this is what I have for you this week. And then thanks you for watching. If you haven't subscribed to the YouTube channel, you can subscribe to the YouTube channel as I click on the notification bell. So thank you for watching, and then do have a wonderful weekend. Peace.